Okay, good afternoon, everyone. My name is Bill Levinson, Managing Partner with Levinson and Associates. With me today, we have the Joseph Loughran, our Marketing Vice President here at Levinson. And then, of course, we have our special guest speaker and our LTC guru that's going to be joining us in about 5 to 7 minutes. I'll make an official introduction. Just a few things that I'm going to go over before we jump in. First of all, I want to thank everyone for taking time out of their busy afternoons, especially right before a weekend here. Also, we're going on webinar number 3 this week. Typically, we like to have at least one live webinar training weekly. And this week we happen to have 3. So, and the number of attendees is outstanding. We're hitting records, which I always love to see. So thank you so much for that. It means the world to us. This is our way of communicating, not just to 1 or 3 or 10 agents, but hundreds from all over the country, okay, in some case thousands. So thank you for that. We try to maximize every minute of your time. We don't want to just talk about, a carrier or a product and dig into how great the company's financials are and talk about how many millions or billions of dollars of surplus or whatever the case is. We want to make this interesting. We try, okay, the goal with every webinar is to have you walk away with some great nuggets of information, okay? Hopefully you're taking notes down, but to walk away with a great sales tip, a strategy, to learn about a new product concept that you can use that afternoon to make more sales, right? And help more clients, which is the name of the game. So, long-term care is a part of the industry, okay, especially in the last few years that, you hear a lot of rumors. Carriers are kind of steering away from the LTC space, standalone products. Okay, we only have a handful left. I remember when I first got into the industry, okay, just over 20 years ago, LTC was a hot button. We had some great products. We had agents and agencies that were focused on selling just standalone long-term care insurance, and they were doing very, very well. That was their niche. So anyway, fast forward now, and it's just not something you hear about anymore. Yes, living benefits are huge, and in my opinion, everybody needs to have a living benefit rider or at least maybe a standalone policy. But it's so important. I can't stress it enough. So here, fast forward to today, we have just a handful of products left. And I think what you're about to hear in a few more minutes is a great story from a carrier that has a standalone long-term care product, some real neat technology and software built around the platform. And we're going to share some unique sales strategies, okay, that you can jot down. And we're also going to send you an email after the webinar. But these are all things that you'll be able to use to change your practice, okay? If you're an LTC veteran, you know the business inside and out, great. I think you're going to learn something new today. If you have never sold a standalone LTC policy, okay, same goes for you, okay? This is going to open your eyes, and hopefully you'll start bringing this up with every life insurance sales conversation. So you're going to hear about some real neat stuff. Obviously, the hybrid products, life insurance with living benefit riders. Yes, it's the hot button nowadays, but a standalone competitive long-term care product has its place. And I think this is going to be the go-to for you. And you'll know in just a few more minutes here. Okay, I'm going to talk about why long-term care LTC is such an important conversation to have with your clients. Just real quick, I'm going to share some statistics. 70% of people over the age 65 will require some care at some point in their lives, okay? What does that tell us? Almost everyone needs a LTC policy. This is interesting. Over $700,000, okay, is the projected average cost for 3 years of long-term care 30 years from now. I love this last one. 2/3 of Americans age 40 and up say they've done little or no planning for their long-term care needs. That is astonishing to me, okay? And what does that tell us as insurance agents, right? It tells us we need to bring up this conversation. I'm going to just mention one more and then we'll move forward. Jot this number down, 97455. So $97,455 is the average annual cost for a private room at a nursing home, according to the 2017 cost of care study. Now, so important here. That's almost $100,000 a year for a private room, okay? You talk about a retiree that saved their whole life and they're going to spend $100,000 a year on a room. I mean, just think about this. So these are stats you need to bring up. And I know Mark has even better stuff, and he's a seasoned LTC pro. But these are things that when I saw this, I said to myself, you know, I need to bring up this conversation to my loved ones, family members, friends, because it's so important. And most people do not have a product or a solution, right? We all know how that works. So anyway, reasoning for today, we hope to gear you up with enough great LTC tools, strategies, technology, so you can go out there and start bringing this up this afternoon. Okay, so at Levinson & Associates, yes, we lead with National Guardian Life. They have an awesome standalone policy. We also have Mutual of Omaha, Transamerica, and Genworth, okay? So those are our backup options. On the right side, those are all of our life insurance plans with long-term care riders, okay? All the big names, Hancock, Agla, Protective, Trans, Lincoln, Pru, Life of the Southwest, Kansas City Life Assurity, and North American. A handful of those products that you're looking at right now also come with our free one-year scholarship tuition program. So just think about this for a second. You're talking to a young family, let's say, about long-term care, and now you're offering little Johnny and little Susie 1 year of free tuition at any of our 400 colleges across the country with no additional premium. So another great door opener, and I hope you're sitting back saying to yourself, wow, you know, now I can see exactly who I'm going to start marketing to. I'm going to go on the Levinson website, start to pull some of their LTC marketing material, and I'm going to get the word out there this weekend, okay? I hope you're all thinking like that, because this is a huge gap, and it's time for you guys and girls to go out there and fill it and bring this up, and you'll literally change a family's outcome for the future. So it's so important. Okay, Joe's going to talk about some resources that we have put together here at Levinson, and then I'm going to introduce Mark, our feature presenter. Joe, you there?
Yeah, thanks, Bill. So real quick, I want to take a look at just a quick screenshot of CarrieLevinson.com. What we've done for the long-term care marketplace, we've kind of put together all the different resources, whether it's prospecting letters, consumer emails, videos, LTC statistics, just how to run quotes. Everything you need to know about long-term care is available underneath the product tab. You click on long-term care, you can have access to every single one of these pieces of information you're looking at. Especially important if you're getting into, you have clients that might be interested. The consumer videos are phenomenal. They're all compliance approved. You can send these out to your clients, even using our agency automator tool, which we're going to be covering in a couple slides here. But just a great way to be able to access some good resources. Also, Bill mentioned earlier some of the linked benefit products that have long-term care riders. A lot of times when you're discussing long-term care, it's very important too to look at some of these other linked benefit products that not only provide long-term care coverage, but also a death benefit. So underneath the product tab, you'll see I've highlighted here in blue, linked benefits. You can access every single one of those products on that tab. Of course, like Bill said, we will be sending out an email with a link to all these different sections on the website so you can access all this 24/7.
Okay, good stuff, Joe. Okay, and right after Mark is done, we're going to show you exactly how to go into the agency automator database, and you can start pulling. We literally have hundreds of thousands of prospects. So you can start pulling from our database, get names, phone numbers, emails, addresses from everyone in your zip code that falls into the perfect LTC candidate. So we're going to show you how to do that after Mark is done. It takes like 5 minutes and it's free as long as you're active with us. So without further ado, I'm going to introduce our Chief Sales Officer from National Guardian Life, Mark Glickman. Mark, you there?
Thanks, Bill. I really appreciate it. Thanks for all your time today. I can see why so many thousands of agents attend these webinars. That was a really great introduction. My background, just so you all know, is I'm an actuary. So I take a little bit of a different, unique approach to this marketplace. I'm not a licensed agent. I just advocate for everyone having a long-term care plan, because I do believe everyone needs one. As Bill mentioned, 70% of people over 65. More importantly, 44 million caregivers out there, right? And the whole purpose of long-term care is to prevent your friends, your family from becoming caregivers unexpectedly for your clients. So we're going to talk a little bit about that, but more about the new approach to long-term care today that's going to offer value for your clients. I work with a company called LifeCare, which is partnered with National Guardian Life, and I want to give you a brief introduction to them in a moment. We're going to talk about some of the sweet spots of the product, but more importantly, how to use the product so we can get your clients putting together a plan. We have this new software program. I'm going to show you how the software program works, and we're also going to give you a copy after you talk to Levinsons and Associations about your interest in this. And hopefully you'll find new ways to offer your clients a plan. So just briefly, a lot of people ask us about who's National Guardian Life. Why did they enter the long-term care market? They see other carriers exiting. So what's different about them? Well, the first thing to note is that they are a prudent underwriter. So it's not difficult underwriting, it's that they're going to be careful because the features that we offer on this plan are going to blow your mind. The value that you can get for clients, it's really going to be outstanding. So our only caveat is that you find clients that are healthy, that are going to qualify, that are planning in advance, and we'll find them the best tax-advantaged, easiest to fund solution that's available in the marketplace today. They're A- rated by AM Best. They are a well-established company. They're over 100 years old, and they are a mutual company that's owned by their policyholders. Okay, so they're doing this because they think there's an underserved marketplace in long-term care, as we all know, and we have a formula that works that's going to help us build a product that's sustainable. And the reason we know about this is LifeCare Assurance, the company that I work for, has been in the long-term care marketplace for 30 years. We've launched products for carriers ranging from Allianz back in the 90s, through Lincoln Benefit Life, through Guardian, through Berkshire Life, Mass Mutual long-term care. We administer those policies that were sold from those programs. So we have about 220,000 policies on the books today that we still administer, all the way from underwriting all the way through claims. We also know what works and what doesn't work in long-term care. And what works, as all the carriers have found out, is you have to be very diligent about making sure that the people who qualify for the program don't have any pre-existing issues or needs for long-term care. One claim of that nature could be a multi-million-dollar cost to the entire pool of risk. Okay, if we can avoid those claims, we can actually offer a very cost-competitive option that's more likely to be price stable, and that's the name of the game today. We expect to have this product to be available in all states. We are currently approved in 46 states. California, New York, Hawaii, and Montana are currently being filed and approved as we speak. So hopefully we'll have those on the platform soon as well. So what do we mean by underwriting? What's involved? Well, it's really, as most of you know, a once-in-a-lifetime purchase, long-term care for your clients. We find that very few people give up their policies. They hold on to them like gold. The lapse rates are so low on this product that actually that's the cause of the other carriers having to increase rates over the past years. Today's product is already priced assuming that everyone holds on to their policy. We assume that 99.5% of people keep their policies every year because of how much they value the coverage. So the process for us is pretty straightforward. We highly recommend a pre-qualification from the health perspective. You can send that directly to the underwriter, and as long as we know what the client has in terms of their health history, they'll give you a preliminary determination of what to expect. So there's no opaqueness here. It's fully transparent. We always set expectations at the outset. Make sure you spend 10, 15 minutes just making sure you do that with your client first. Everything else that follows from that is a good experience. So the only bad experiences we have is when agents and advisors skip the step of just doing a basic pre-qualification. Beyond that, the application process can be streamlined. We have an e-app that we just launched as well, and we can make that very smooth. And then from the client's perspective, if they're 40 to 65 years old, it's simply a 20-minute phone interview. So that's the entire process. Even though we call it thorough underwriting, we fully underwrite and all of that, we really have you promoting that we're looking for healthier clients, and the process, once they come in the door, we can make that very streamlined. So this is our pre-qualification form. You can actually download this. We'll give it to Levinson Associations to put on the website. And if you do want to do that preliminary assessment, you just fill out the form anonymously and submit it to the underwriters. So what are the plan steps today that we really need to take to get more people coverage? First thing is to talk about the consequences of long-term care. Okay, everyone has a personal story. If they dig deep, they know that they've experienced this before. I myself, I'm a younger guy, but both sets of my grandparents had long-term care needs. One set were Holocaust survivors, very poor. They lived in inner city Detroit. They ended up both needing long-term care for several years, and I watched my mom as she took care of them, and it actually deteriorated her health. So I really have a personal connection to this. On my dad's side, my dad's parents were actually owned an insurance agency. They were one of the first life insurance agencies to work with P&C agents for their life insurance business, and they bought what we call an executive carve-out long-term care policy with full return of premium, took a tax deduction, and they were actually able to take advantage of that. And actually, my grandfather, who passed away a few years ago, he actually used those benefits as well. So I've seen both sides of it. Not having protection, obviously having that plan in place is so critically valuable. And I'll also talk about that tax idea today too, because it's still relevant. Second thing, of course, is do that pre-qualification as we just talked about. Third step is, today it's about understanding how your client's going to fund the plan. The number one reason people are not buying long-term care insurance is they think it's too expensive. If you're able to identify an idle source of funds, obviously those can be reallocated very efficiently. I'm going to show you those concepts today as some of our sales ideas. But if you know how the client's going to fund the plan, you're going a long way towards understanding their budget. Okay? Once you know what they are looking, what they're comfortable spending, then they start to ease up and want to have the conversation with you about the need and the cost of care. Okay, so I usually start off with trying to assess, what is the client looking to spend? Are they going to spend it out of income? Are they going to spend it out of their IRA or 401k? Are they going to reposition a CD or a life insurance policy? Knowing those basic facts are going to help you develop a story that's very compelling to them, because it doesn't feel like they're paying this extraordinary cost. And once you hit that budget, show them the value, guess what they ask you? Can I buy more of this? Okay, so you will get a conversation that leads to a high-end sale, but do narrow in, focus in on the budget. And then finally, once you know their budget, we'll focus on how to plan for their needs at point of claim. Today's hybrid products, they're very good. There's a lot of different products with riders on them. I'm pretty agnostic. I think that all of the products out there have solutions that meet various clients' needs. But the one thing that's being missed today is that people are kind of ignoring, avoiding the conversation about what are they planning for. Most of the hybrid plans today are bought without inflation protection, for example. Okay, so we kind of ignore this fact that at point of claim, perhaps they're not going to get anything close to the $100,000 a year they need, as Bill talked about, for a nursing home. It's not always about the nursing home. It also covers home health care coverage, and people like to stay at home. It's a little bit less expensive, but the cost of home health care coverage is going up even more dramatically than nursing homes today, because there's a shortage of caregivers, and there's a shortage of those people who provide the care. So we do have to hopefully fund a plan, because these costs are going to continue to increase dramatically. So what's NGL all about? I want to give you just a high-level intro, and I know I'm scratching the surface on a lot of topics, okay? So we can dive into these in more depth, but why we launched this product is NGL. I would think of them as a specialty carrier in long-term care. You see these in the DI market as well, just certain carriers that have focused in on those markets to offer the best value and kind of make their name in that marketplace. So for NGL, I think you should find the most cost-effective plans with the most high-end, rich features available as well. From the agent perspective, we're trying to build a suite of tools, and I'm going to show you this Benefit Buddy software today to help you share that value with first your business partners and to convince yourself that this is a great value, but also eventually with your clients as well. So we're moving into that realm of trying to build it for a consumer to see as well. And then for long-term care people out there on the phone today that know about the importance of long-term care planning for their clients, we know that your clients all have different needs, and we've designed a plan that meets a variety of needs. So don't get confused or make it feel complicated to have the features that we have in the product. I'm going to show you where you can use the features, but keep in mind that the point is that we have a solution for people that want to spend a few $100s a year. Believe it or not, we have a solution that you can build that's more than $1 million single premium. Okay, and they both have tremendous value. So we'll talk about the different sales ideas here. So what makes NGL unique? These are the key features that are available on the product today that are virtually not available anywhere else, okay? The first thing to note is that we have a special joint policy design which offers two people their own pool of coverage, but they only pay one price, okay? And the way we priced it can kind of look like a buy one, get one free deal. So if you have a female that comes to you and says she's interested in coverage, but her husband, he's not interested, well, of course, we need him to get coverage so she doesn't become his caregiver. But our product is designed so that if you buy her plan, his plan is free or virtually free, okay? As long as they both qualify from a health perspective. So oftentimes we have people coming along just because it makes sense from a perspective of getting them both coverage. We also have, on top of that joint plan, the ability to extend out the coverage to make it much longer and to add more to the pool of benefits. We call it a shared care rider. Other carriers have something called a shared care rider where you can tap into each other's benefits. The NGL shared care is really unique because not only is it very cost effective, but it gives a third pool of benefits. So each person has their own pool. Let's say it's 5 years for each of them, but then if they run out of the 5 years, they don't run out of coverage. They actually have another 5 years that they can share with their spouse to tap into. So that type of benefit might be a total of 15 years for the two people. And when I show you the pricing, I'll show you a little bit on the next slide, you'll get a sense for it. This is selling features because of the value it offers. We did also launch a lifetime benefit option as well. So definitely take a look at that for your affluent clients. There are no other traditional products that have lifetime benefits anymore, except now for NGL. So we brought it back to the marketplace, and I think you'll find that unique for situations where your clients want to put that risk away forever and not have to worry about it. We also launched two new features which kind of address the risk or the fear factor, I would say, more about rate increases, right? People are not looking at traditional long-term care because they're afraid. They hear a lot of negativity about rate increases. And we all know that was because the prior products were underpriced. Today's products are not underpriced, so it's less likely they'll have a rate increase, but still you're going to hear that noise and negativity. So rather than fight it, why don't we offer options that help solve it? And we have two different features. One is a single premium option, which just means that you pay all of your premiums in a lump sum. And frankly speaking, if you pay them all as a lump sum, you have a guaranteed premium. Okay, the policy becomes non-can after you pay your initial premium. We also have the ability to do something in between, a 10-year, 10-pay option. And what that means is once you've paid your 10th premium, you're fully paid up in the plan. You can't have a rate increase after your 10th year. We know in the first 10 years, you're obviously less likely to have a rate increase because it's a new product that just launched, and it takes many years to develop experience to justify one with the regulators. So the 10-pay is something that's used to feel very comfortable about rate increases. The last feature that you see on here is kind of a new concept because of the popularity of hybrid plans. It turns out that you can do something very similar on traditional long-term care as well. What you do is you buy a traditional policy and you add on a return of premium rider. And we have a few different variations on this, but the basic premise is if the client does not use their long-term care, they pass away, and they have the return of premium rider, 100% of the premiums they paid into the plan get paid to their beneficiary as a death benefit. In addition to that, and you can choose to add this one or not add this one to the return of premium, we have what's called a cash surrender feature, which means that if they want to surrender the plan, after the 4th year, they can get 80% of the premiums they paid into the policy back to them, no questions asked. Guess what that looks like? Live and you have significant long-term care coverage, die and you have a death benefit, quit and you have a surrender option. This is a hybrid plan built on a traditional design, which gives you a lot of advantages because traditional long-term care is considered similar to like health insurance, which means that it's tax deductible for businesses, and you can actually roll in a non-qualified annuity to pay for the coverage. So we're going to talk about those two sales ideas, but it really opens up a new world of possibilities on traditional long-term care that you may not have known existed. So first I want to show you the value of the plan, and then we'll jump into those sales ideas. What I'm showing you on the screen here, I just took a screenshot, a snapshot right before this call. I plugged this in here, and I looked at the leading traditional long-term care carrier on the marketplace today. You probably know who that traditional carrier is. This is a 55-year-old couple, and they're planning for point of claim at age 85. And so what I've shown here for the two people is their combined premium, $3,200 in total, the premiums they'll pay over those 30 years, which is $97,000 and change, and the benefits that are available at point of claim at age 85, about $800,000. Not a bad value. Over 8 times protection, $100,000 approximately for almost $800,000 of benefits. Again, this is traditional long-term care, so there's no death benefit if they don't use it, but of course, a lot of people are going to like this plan because it hits the most affordable price point. I'm going to show you the NGL plan for $3,200 and what it can buy you. It buys a 5-year plan for each with that shared care rider, same cost, same total cost. Look at the benefits. Okay, this is why long-term care is relevant again, is it can be very cost effective. Okay, there's a lot of different plan designs. I'm going to show you the software where I created this plan design, and you'll see how easy it is to do. But keep in mind that the shared care rider is popular because nobody has that third pool, and the fact that we can buy our plan for less money allows us to buy a longer benefit period, add that on top of it, and when you add all the benefits together, you can get a lot of coverage here for a very affordable price. Okay, so we'll look at that in a moment. Second comparison I wanted to show you is I chose a carrier that has an indemnity hybrid plan, a very good carrier, by the way, one of the leading carriers in that marketplace, because it was kind of a prototypical example of what I see. Okay, they're buying a 6-year benefit for 2 people. They paid $150,000 in total for their coverage as a single premium. They didn't buy inflation protection, and like I said, most plans are actually not bought with inflation protection. So I took the average monthly benefit and I divided by 30, is roughly $200 a day, just to give you a perspective so we can compare it apples to apple. And the total benefits that are available, and these are indemnity cash benefits, so keep that in mind, $841,000. Now this is a hybrid plan, which means that it's got a life insurance-based product to it, so it tends to be weighted more on the death benefit. So you can see that your death benefit is still significantly higher than your premiums paid at age 85. So a really good plan design. I wanted to compare against that with the return of premium option that we just talked about. This is the NGL, we call it traditional hybrid plan. Sometimes we call it the reverse combo. $150,000 of total premium for the joint policy, 3-pool of benefit plan. Look at the total long-term care benefits for the cost, but if they don't use any of these benefits, they get the money back as the return of premium death benefit. If they want to surrender the plan, they get the full 80% after the 4th year, kind of vests over the first 4 years. So they have live, die, quit benefits and a lot of long-term care protection. What does this mean? You can offer traditional plans in hybrid situations. I'll tell you the most common thing I run into amongst agents out there, whether they're long-term care experts or not, is they say 2 things to me. I have a conversation with a traditional agent. They say, I can't believe these people are buying hybrid plans without inflation protection. And they say, I'd never sell one of those plans. Of course, their business is shrinking on the traditional side and saying, you might want to consider it, right? And then on the other side, I run into financial advisors that only offer one product, and they say, I can't believe people buy traditional plans, right? They're not guaranteed premiums and use it or lose it, and they have all these negativities. It's not about the product, folks. It's about the solution that's right for the client. With NGL, you can present both options, and that's the key thing. In fact, you can switch from one to the other depending on how your conversation goes with the client. Okay, and again, that's where we're going to use the software to see how we can seamlessly navigate. Just keep in mind what their budget is, what their funding source is, and if you keep your eye on what their needs are, you will design the right plan for them. Okay, let's jump into some of those sales ideas that I alluded to. Why is long-term care coming back in terms of traditional, but also the hybrid options? It's because we've resonated with the client on something that's a real pain point for them, which is funding this plan. So the first case study I wanted to show you is funding the plan, because a lot of clients, they'll buy life insurance, annuity coverage. They don't exactly know why they own it anymore. They've held it for a number of years. Maybe it's not providing, what they bought the annuity and it was for deferred growth. And they're really not needing guaranteed income, but, they don't know what to do with it. But they know they need long-term care and they don't know how to fund that plan. Well, the amazing thing about the latest Pension Protection Act is that it allows you to fund long-term care in a very cost-effective way. And through the Pension Protection Act, you can do a 1035 exchange. What most agents and advisors do not know is that you are allowed to use either a non-qualified annuity or a non-qualified life insurance policy to fund traditional long-term care. Okay, so most people do know you can take a life insurance and fund another life insurance with a long-term care rider, but they don't know you can take a annuity and fund a long-term care policy. So the way it works is you take the annuity cash value, including any tax-deferred gains in the annuity, you apply them towards the premium directly, and once you get the long-term care benefits, they're still received tax-free. So I always get asked, what happens to the gain, that's in the annuity contract? It's going to fund your premium. Do I have to pay tax on that? Nope, the gain goes away. So this is a big opportunity to get people funding their coverage because most people don't want to take a distribution out of their annuity. Why? Because they don't want to incur taxes, which are usually paid at their ordinary income tax rate, 37% taxes on those gains. It's a very cost-effective way to use the gains in the annuity plans. So why have we not heard of this? Why are you not hearing about this from other carriers? Well, there's two criteria that really make it go. The first is that it has to be traditional long-term care in terms of getting the leverage you need from the long-term care benefits, which can accept annuity plans. The second thing is we've never had a traditional product that had a single premium option since the Pension Protection Act was enacted. This is the first product that actually has the ability to do this in a very seamless way. Okay, so here's how it works. You need to have a non-qualified annuity. You have to make sure that the owner and the insureds are the same on the annuity and the new long-term care policy. But once you transfer the funds over, you have a guaranteed premium long-term care contract that's just been funded directly from the annuity. So it's pretty simple from that perspective. If you do have case studies, we can get into it. There are some caveats about the joint policy. If you do have a joint annuity, it works. If you do have a single annuity and you want to transfer it in, we have some solutions coming soon to allow you to do that too. So just keep in mind, if you have clients that have existing annuity or life insurance coverage they no longer need, we can get them long-term care protection as long as they're still healthy enough to qualify. So let's look at a case study real quickly and see what this might look like and what the value of the plans look like. I'm going to call our client Jack, and we'll pretend he purchased his annuity at age 45. He bought it for $60,000. He's now 60 and it's grown to $100,000. Okay, so he's got $40,000 of gains in the contract. He's planning for his retirement. He knows he needs long-term care. Perhaps he had an experience and he's seen it in his family, that kind of thing. His assets are performing well, so he doesn't really need the annuity for retirement income any longer. So what is the most efficient way for him to fund his long-term care plan? So you've probably seen this concept with the hybrid plans. I'm going to show you how it works with the NGL options. If he stays the course, holds on to the annuity, he's 60, he's planning for point of claim, which again is really important to focus on. When is he most likely to use it? Probably age 85 is what the average is. Let's take a look at what the annuity looks like in 25 years. Okay, let's pretend it's got a 3% return on it. It will take the $100,000 up to $208,000 over the next 25 years. So a little bit more than double. Again, he's going to have to pay ordinary income tax on the gains. So $55,000 of that is going to the government, which leaves him with $153,000 after tax. Not a bad starting point to a plan, but as Bill mentioned, picture the $100,000 nursing home cost in 25 years. What is that going to look like? That might be $250,000, $300,000. This might be a half a year of coverage for him. Okay. If he has an extended long-term care event, of course, on average, it's 2 to 4 years. It's going to run out of coverage within his self-insurance plan here with this annuity. Let's take a look at what happens if he transfers the risk now. He's 60, he's $100,000, he's proactively planning for the need, he qualifies for essential LTC from a health perspective. We do the 1035 exchange. What are his options? Well, we have quite a lot of different options as we talked about. Let's look at 2 of them. Let's look at the first option, which is the hybrid approach. We can buy him a 5-year long-term care insurance benefit, reimbursement benefit, tax-qualified benefits. If you look at the $568,000 in that pool of coverage. Oh, and by the way, if he doesn't need the long-term care, his beneficiary gets his $100,000 back. If he surrenders the plan, he can get $80,000 out of the plan if for some reason his plans change. So he has liquidity. He has an option there as well. Guess what? It's a hybrid plan, but it's on a traditional product, so we can take the annuity. Second option, I'll tell you, I'm a little bit biased. I like this one a little bit better. He can buy lifetime coverage. He might not need the death benefit to his beneficiary. He might just want to keep all the benefits for his protection. And let's pretend he has a 10-year claim. That might be $1.6 million a cost to him. These are significant costs, that you incur if you have Alzheimer's and you're on claim for 10 years and you really need care. So this is the peace of mind option, and this obviously gives you the most bang for your buck as well. So a lot of different choices. I'll show you how we can kind of custom design plans, but those are just two that I selected for this case study. This is what the software looks like. I'm going to show you it in a moment, but we can actually plug in the situation that he has, and side by side we can assess to the client, Jack, do you prefer this as your long-term care plan, or would you prefer this? And it becomes very clear to clients what we're trying to do for them at point of claim. Let's look at the second case study, another tremendous market. Obviously, there's a lot of clients out there with existing legacy life insurance annuity coverage that need long-term care plans, so that's a big marketplace. This is also a big marketplace. Business owners are allowed unique treatment if they pay their long-term care premiums through the business. So I'm going to show you an example. Again, let's pretend that we have self-insuring for this business owner, or we can transfer the risk, and let's see what we can get them with the NGL Essential LTC plan. First, I want to show you how the tax aspect works. And again, I'm not a qualified tax advisor. You're probably not a qualified tax advisor unless you're a CPA out there. Talk to the client's qualified tax advisor, but here's how it works, and it's very simple at a high level. Long-term care premiums are treated like health insurance for businesses. And what happens with health insurance? You're allowed to take the premium as a business expense deduction from your income. The unique thing about long-term care is the government also lets you still receive the benefits tax-free. So if you guys are familiar with disability income, and if you take a deduction from the business, you get your benefits taxable. Long-term care doesn't work like that. You get a double dip. What does that mean? It means that if you have a business owner client, in almost every case, they should be considering writing their premium through the business instead of writing it out of pocket for the tax savings. Now, we call this an executive carve-out because they also allow you to design these plans for whatever employees in the business you want. So if you just want the business owner to get coverage and you want to exclude everyone else, you're allowed to carve out the plan. And you can choose a set of criteria with which to do that, and that's allowable too. So this is a very popular concept in the long-term care space, but very few people, tax advisors, know about it because it used to be used with the 10-pay option, and we haven't had the 10-pay option in many years. So NGL is now bringing back an entirely new marketplace because of the fact that we have the features that people need to do this. Why 10-pay? Well, picture you have a business owner and they're 55 years old, and really they want to be paying this plan, out of their working income, and by the time they're retired, they don't want to have to deal with the premiums anymore. We also would love to take it so that the deductibility is taken while they're earning profits from the business, so they can take the deduction every year for 10 years. Okay, so it's like the perfect marriage. It's also applying to a actively at work person who's more likely to be healthy, more likely to qualify. But what we really need is for agents and advisors to be aware of the tax aspect, because nobody knows about it. They're not going to think to ask about it or talk to their client about it. You have to be proactive about this concept. So it's luckily you only have to ask one simple question. Do you own a profitable business? Because this concept doesn't just apply to C Corps, it applies to any business. Okay? It's fully deductible for C corporations. Let me show you how this works for small businesses. Okay, this is kind of a new idea for a lot of folks out there. For a small business, typically their income from the business is what's called pass-through income. So they're actually taking the business income and they're paying tax on their individual tax return for it. Okay? Now for long-term care, just like health insurance, even though you have the income pass through to your individual tax return, you're still allowed to deduct it. You probably can't see it very well on the screen here, but it's on the front of 1040. If you look at your own 1040, your own tax return, you'll see it. Self-employed health insurance deduction. What does that mean? If you own your own business and you want to buy your health insurance through the business, you are allowed to deduct that as a business expense on your 1040. For long-term care, the only other limitation is that the IRS publishes maximum deductibility that you're allowed to take every year. Well, here's the new thing about this. The limits this year are about double what they were 20 years ago. The growth in these deductibility limits has been so much that in most cases that I see, a significant portion, and sometimes all of the premium paid from the long-term care insurance policy is tax deductible for small businesses. Okay, so this is a big idea. If you think about tax reform, what's happened with the tax rates? Well, the C corporations' tax rates have come down quite a bit. They've come down to like 21%. The individual tax rates are still pretty high. They come down a little bit, but they're still like 37%. So if they're paying their business income on their individual tax return, the deductibility here saves them even more money on a small business than it might on a C corp, simply because they pay more tax. What do business owners like the most? They like to not pay taxes. This is a great concept to bring to a business owner to get them to do their long-term care planning today, because guess what? They want to take this deduction this year. Okay, so understand, just learn this concept. That's it at a very high level. That's really all you need to know to approach the CPA. You can point them to the areas of the tax code which actually allow for this. We can give you kind of the references. Don't pretend to be a tax advisor when you're not. Okay, there are different aspects for different businesses. But if you just start to work with their tax advisor, they will start to want to do this with you because their client, the business owner, wants to take a look at this. Okay, and they're going to ask them to research this for them. So let's look at a case study and show you how the value of this works in practice. Okay, I'm going to do this with a couple. We're going to use the joint plan design in this case. The one nice thing about the health insurance deduction is that you're allowed to include your spouse's independence on it too. So we can offer the joint plan, and if you have each of them taking the deduction, they can each take it up to the limits for each individual. So we're going to assume that Sally here, she owns a profitable small business. She's trying to plan for long-term care. She's dragging her husband Mike along for the ride, right? Because she doesn't want to have to take care of him when they're 85 years old. They've had a personal experience with long-term care, as most people have, and they're kind of ripe for wanting to do this planning. But they think they can save enough because their financial advisor told them, you should self-insure this risk. We hear that a lot. But of course, it's very difficult to self-insure in a low interest rate environment. But let's take a look at what the numbers are. Let's pretend they self-insure the long-term care plan. Let's pretend they save $8,000 for 10 years, $81,000 in total. Give it to their financial advisor who invests it, and he gets them 5% per year. Pretty good job on his part. What does this look like at age 85 if this is their plan for long-term care? The $81,000 will have grown to $224,000, and after tax, because again there's capital gains tax on investments, they'll probably have about $200,000 combined. Okay, again, $100,000 each, not necessarily going to go a long way towards protecting against an extended long-term care event. Can we do better than that? Well, of course we can. We all know that, right? Transfer the risk. How does it look if we transfer the risk into Essential LTC? Well, we're going to take a 10-pay policy. We're going to buy the same amount in terms of paying the premium. We're going to do that shared benefit rider again, the inflation protection, all the goodies that are available in long-term care now. At age 85 in 25 years, let's look at their two options. And again, I'm going to present the two options again. We have the hybrid approach, which gets you $1 million of protection for the two in those three pools. And if they don't use the benefits, they get the $81,600 back to their beneficiary as a second-to-die death benefit. Or we buy them a traditional plan, which gives them a lot more long-term care coverage, $1.8 million of coverage. What does this look like? Here's the Essential LTC plan that we just designed with the Benefit Buddy software. This is what it looks like side by side with self-insuring. After tax, a lot less, right? Makes it very easy to present this and to show what the value of transferring the risk is. Tax deductions. Oh, I just showed you the value of them paying it out of pocket. But guess what? They own a business. What happens if Sally makes at least $8,000 in profits from her business and she wants to actually take a deduction on the premiums? Well, as a small business, she's limited to the age-based limits. So her premiums over 10 years will look something like this. The first year, Mike and Sally are age 60, so they can take $1,560 per person off of their premium as a deduction. So they're limited to $3,100. So out of the $8,000 of premiums they spend, they can deduct $3,100. The next year, when they turn 61, they actually can deduct up to $80. The full 10-pay is covered. If you do a lifetime pay, of course, it's even more likely to be covered, but 10-pay makes a lot of sense. So as long as they earn profits over 10 years for each of the next 9 years, they can deduct the premium in full through the business as a business expense. What does this mean? We look at their tax rate and we pretend it's the 37% individual tax rate. We take 37% times the tax savings, the deduction here, we get this number here. $1,000 off of the premium the first year, $3,000 off the premium for years 2 through 9. That means that the true cost of this plan is not $81,000, it's about $53,000. Okay, we take $28,000 off the price. They're effectively saving 35% off their premium by buying it through the business. Okay, so don't worry about necessarily a 5%, a lot of people ask me about the 5% discount that we have. Why not consider the 35% discount that you will do if you can deduct this? Okay, so we're going to take a look at this with the software, and I want to show you how we can customize these designs, and then we'll open it up for a few questions. I know we have a few minutes here. What I've just shown you is the screen share, a shot from the software that we've developed. We're going to give you the very first generation of this. It doesn't have all of the features that I'm going to show you, but it has this software right here, which is called Benefits Buddy. It's the most important thing in the plan, which shows you the value of long-term care. So annual premium, total premiums, total benefits. And then one other thing I have on this software for your use, really for agents to use, is to say for every dollar of premium, how many dollars of protection am I getting? In this case, they have 22.9 times the premium they've paid into it in the form of protection. That's a lot of insurance protection. A lot of leverage is a lot of the hybrid plans talk about. If you look at a hybrid plan, maybe this number is between 3 and 8 times, right? Okay, the traditional long-term care, of course, can offer you more. But if you want to look at different designs, you can do that. If you want to look at a hybrid option, we can add the hybrid feature. And again, you can see, how does the protection change? The LTC benefits are the same. The cost, of course, went up. But now if they don't use the long-term care, they get all their money back as that second to die death benefit. And they have the liquidity where they can get 80% of the premiums back as well. This is the annual pay option. So we can build really affordable annual pay designs. I've seen hybrid plans that are as little as $1,500, $1,000 a year for 2 people. Okay, it might not have a ton of long-term care coverage, but it takes away the risk, takes away the fear. They get all their money back. They get a rate increase, which of course is not as likely today. They get all their money back. What did I say? They get a rate increase. They get that back too. Okay, so it takes away a lot of the fear having a hybrid option on here, but it's not for everybody. Again, just choose the right plan for your client. We can do the 10 pay option here as well, and you can take a look at the total premiums. That might help you decide if you like the 10 pay option or not in a particular situation. $171,000 for lifetime. If you pay it over 10 years, it's actually less expensive in total, $147,000. So don't quote the sticker price. Don't worry about the sticker price. It's really about what you're paying this plan in total that you really care about when you're planning with clients, and about what you're getting at point of claim. That's what Benefits Buddy does. And again, you can change any of the parameters, any of the options here, and this chart will in real time show you what you get. Okay, so hopefully we're making long-term care a little bit simpler here. If you want to know what we're showing in this chart here, there's a projections tab on the version we're going to give to you that actually has, oh, it's got too many numbers here. Let me close this. It's actually got the premiums here for 10 years, and it's got the benefits that we're showing in those pie charts right here. Okay, so you can see how it plays out year to year. Okay, how does the return of premium work? You can answer any of your questions. They're right here, how the return of premiums work, how that optional surrender works. So it kind of looks like an illustration. You do need to quote the official illustration software when you're showing it to clients, which is on the web. So you have to download the official quote. This is not a client-facing tool yet. I say yet because it's very popular, so I think we're working on a version for consumers soon too. Okay, before I end this, I want to show you some of the other things, because I know a lot of you will say, I want to see what you did, Mark, there with, you know, the target premiums and the self-insuring and the business owner. I'm going to show you that. It's kind of a teaser because I haven't yet released these features, but I've been authorized to do them on screen shares. So if you have client case studies as a next step, it'd be great to do like a workshop where you guys are on the phone. If you have a case study, I'll plug in the ages of the clients. We'll actually do this analysis directly with you. And of course, I can do them on the fly because I just plug in the numbers into the software and we'll show you what you can design for your clients. Okay, so I'm going to do a plan, and I'm going to pretend I'm going to take off the return of premium, and I'm going to say, let's say this client has a budget, and I'm going to say it's $7,000 budget. Because again, we focus on budget. It's a 10 pay, okay, so keep in mind it's only over 10 years. What the software is going to do is it's going to say it's roughly $130 a day. So it's going to get a target premium here. And you're going to see how all the numbers kind of update for you. Now, if we do this and we want to self-insure with the $7,000 instead, again, new feature here. This is called Funding Buddy. Takes our Benefits Buddy on the left-hand side, and the right-hand side, we have a canvas here where we can start looking at what does this plan look like in 30 years. They self-insure. If the advisor says it's 6% returns, plug it in. Don't worry what the advisors say. If they say 10%, we can beat that too, again, because we're providing a lot of protection with the long-term care coverage. Capital gains tax, 15%. Plug in whatever it is you want to use. Again, don't give tax advice. There's a little disclaimer that pops up. This is not tax advice. But after tax, again, you want to consider that because these are tax-free reimbursement benefits, right? Tax-qualified long-term care. Okay, so we can do this really instantaneously. Again, any situation you want to do. If you have a business and you want to know how much tax savings they get from taking the $7,200 deduction, and they're a small business, and we got to run them through the age-based limits, there you go. It actually calculates it for you here. Okay, so we can use the software. And again, this is just a total number over 10 years. So you say that they're going to retire, when they're 60 for some reason. We can cut it off after 5-6 years, and we can see that. Of course, it's always worth doing. Even if it's 10% savings, it doesn't matter. It's always worth doing, but they're more likely going to save 20, 30, 40% off the cost. Now, how this is working, just so you know, in the background, the $17,000 number is actually run through the calculator here that you saw in the slides. We're actually taking the premiums, looking at the limits, and the software is looking at their ages, and it's calculating what the tax savings are. Okay, so it's doing all that for you. And again, it's very easy to understand how this works. I don't want you to have to calculate it, especially if you're new to this concept. So bring your ideas to the workshop. I'll show you how it works. If you have a client and it turns out they're 58 and their spouse is 56 and they all have different age limits, this is actually recalculating the age limits for you. In most cases, like I said, significant tax savings. It really doesn't matter. And it doesn't matter what this number is with clients. If you're saving the money and they're able to pay with the corporate checkbook, even if it's very little tax savings, they much prefer pay with the corporate checkbook. You'll get them to start doing long-term care planning. So those were a couple of ideas. We also have the 1035 idea built into here if you want to do that as well. Again, you plug in the annuity return, you plug in the tax rate, which is probably ordinary income tax. And then, of course, if they have the existing cost basis and you have the cash surrender value, we'll do it as a single premium here. Just to show you what this looks like. We can do a single premium design, plug in a $100,000 target premium, and voila, this is transferring the risk versus self-insuring with the annuity. Regardless of what the parameters are, we plug it in. We'll help you, orient you as to what you need to do from the operations mechanical perspective, same owner, same insured, and all that type of stuff. But just bring the ideas to the table first, and we'll show you if it works, if it doesn't work. The key thing to remember is that underwriting is paramount. So you have to be clients that you pre-qualified, because that's the only thing that could be really a bad experience here, again, because of the value that the NGL plan has. Okay, I've talked your ears off. I know we've covered a lot. Your heads hopefully haven't exploded at this point. Let's open it up and see what questions you have.
No, that was great stuff, Mark. That was one of the best LTC training webinars that I've seen. So I think everybody stayed on. So that says the proof is in the pudding there. That says a lot. All right, so we have this line closed. So if anyone has any questions, just call us or shoot us an email. We can get Mark on the phone, of course. We can also set up one of these workshops. So give us some feedback, good, bad, and different, and we will do our best to make sure that we put something new together that caters to everybody on the call. So that was awesome. We have just a couple more minutes left, and then we'll wrap up here. Agency Automator, you're probably scratching your head saying, what a great message. I now have a little insight here on LTC, great product to go out and sell. Who do I speak to, right? How do I build my database to market to? So Agency Automator is the solution, especially we just rolled out the 2.0 version. Very proud of this. It's literally been about a year and a half of tweaks, updates, changes. We launched this, in fact, this week, and it's officially rolling out Monday. So real quick, 2.0 includes a new website builder. Okay, this is all complimentary, by the way. A new website builder. So if you already have a website, let's say up and running, definitely take a look at our new tool. Everything's already built in, no charge to you. Our prospecting tool is where you're going to go in and you can say, okay, I want to work in this zip code, 33067. I want to market to all young families between ages 55 with a household income of $75,000. The system will give you names, numbers, emails, addresses, so you can go market to. And then we have all the marketing pieces in our library that you can choose from, and we can customize with your logo and branding. So you need to do this stuff. You know, it's so important. We've all been in the grocery store running into our neighbor, Judy, you know, and Judy bought a life insurance policy from you. You run into her online at the supermarket and she says, oh, Bill, how are you? And you say, great. And Judy says, I just want to let you know I bought one of those cool long-term care policies that everybody says you have to have. And you say, well, Judy, why didn't you buy it from me? And she says, oh, I didn't even know you sold long-term care. I thought you sold just life insurance. Well, shame on me, because I didn't market properly and keep my name in front of my clients and prospects. And every time I send out a marketing piece, I should talk about life, LTC, annuities, DI, right? So shame on me, I lost the sale. Well, use Agency Automator to make sure that never happens. There's also a built-in virtual assistant, recruiting tool, a bunch of options, complimentary. So as long as you are active with us, okay, and you're writing at least an app a month, we pay for everything, except obviously for the hosting charge, which is $10 a month. But other than that, there's no fee if you're active. So Joe's going to show you real quick what this looks and feels like, and then we're going to end the call in about a minute and a half here. Joe?
Yeah, thanks, Bill. So real quick, using Agency Automator, like Bill mentioned, you can go into the prospect database, not only target consumers, but also business owners. So, you know, we've got over close to 40 million contacts inside of this database. You can specify the demographics, use those email marketing templates, especially those client videos that I showed you earlier in the webinar. You can use those to kind of create that custom email marketing to the clients. See who opens your email, when they opened it. If they clicked on anything, that's a hot lead for you to follow up on. It's a great system, and we have several hundred agents that are using it now, especially with 2.0 and the virtual assistant. It's really a must-have to help generate some new leads. So I know we covered a lot of material today. We will be emailing out all the information, including these infographics. On the left there, you see one for marketing. It covers every single one of our platforms, programs, sales tools, even our online contracting system. In the middle, the contracting infographic here, this is a great way to kind of learn how our contracting team works and what you have to do to actually access the programs and get started using all these great products and resources. On the far right, the new business playbook, this kind of gives you an overview of how our new business team works, how our case managers process your applications, order your exams, scrub everything, and make sure that it's going to get approved as quickly as possible. So we will be sending those out. Be on the lookout for those. They're great pieces that kind of help streamline your entire new business cycle.
Okay, great stuff, Joe. So Agency Automator, you want to brush up a little bit, find out a little more, ask questions. Every single week, we host a live training webinar with the creator. So Tuesdays and Thursdays, 2 p.m. Eastern time, write down those days and times. You have to do this. We're obviously we're not in the technology or software business, but to grow your practice, okay, you need to market yourself online through e-blasting, through social media and YouTube. So get familiar with this. It's free. There's no excuse to not move forward. Okay, real quick, June 21st, we're going to talk about top IUL sales ideas and strategies by using our latest iGenius software. Right below that, on the 27th, we're going to talk about the industry's top long-term care riders, so life insurance with LTC and hybrid products. So great stuff there as well. We're going to end with this. That was a awesome, fantastic LTC webinar. I feel like, we just don't talk about LTC enough. It kind of has a black eye in the industry. And with NGL and Mark's presentation, it brings a whole new light to a standalone long-term care policy. And it's endless opportunities out there because you can go back to your existing life book and spark up a new conversation. There's so many reasons why. We're going to end with this. It doesn't matter if you're speaking to 1 or 1,000 people, always bring your A game. And that one person will turn into hundreds and thousands before you know it. The point is, give it your best shot. I don't care what you're doing. I don't care who you're speaking to. Always bring your A game. Bring 110%, which is exactly what we did today. With that said, have a great rest of the day, a good weekend, and great selling. Take care.